The market in 2026 is still near all-time highs, but the environment has changed. Investors are no longer rewarding hype, they want results. With interest rates still elevated and AI spending exploding, companies now have to prove they can turn big ideas into real profits. So today we're looking at 10 stocks with huge upside potential and the catalysts that could move them. Let's start with Hims and Hers Health, which is one of the biggest movers in the market today. The stock surged after announcing a partnership with Novo Nordisk, the maker of blockbuster weight loss drugs. Instead of competing with copycat medications, Hims will now distribute FDA-approved drugs through its telehealth platform. That deal removes a major legal risk and positions the company inside one of the fastest-growing healthcare markets. Next is e.l.f. Beauty, which continues to disrupt the cosmetics industry. The company is expanding internationally and partnering with Ulta Beauty to grow its presence in new markets like Mexico. Its strong digital marketing strategy is also helping the brand connect with younger consumers. The main risk here is valuation, because high growth expectations are already priced into the stock. Now let's look at Visa, one of the strongest businesses in global finance. As the world continues shifting away from cash, Visa benefits from trillions of dollars moving through its payment network every year. Massive share buybacks and strong margins keep investors interested. The biggest risk would be a slowdown in consumer spending if economic conditions tighten later in 2026. Moving into streaming, Netflix recently rallied after walking away from a potential acquisition involving Warner Brothers Discovery. Investors like the financial discipline. Instead, Netflix is focusing on expanding its advertising tier and experimenting with live content. Those initiatives could drive new revenue streams, but the stock still trades at a premium valuation. Next up is Royal Caribbean Group, which is benefiting from a massive travel rebound. Cruise demand has returned strongly, with ships often sailing above full capacity. The company expects strong earnings growth as bookings remain strong. However, cruise lines still carry large amounts of debt from the pandemic shutdown period. Now let's talk about Meta. The stock dipped earlier this year after announcing enormous AI spending plans, but Meta's advertising business is still growing rapidly, and those investments could power future products and revenue streams. The debate now is whether the massive AI spending will pay off long term. Another major AI player is AMD. AMD is becoming the leading alternative to NVIDIA in the AI chip race. Its new accelerators are being adopted by major cloud companies building AI infrastructure. Growth is strong, but the stock also carries a high valuation, which means expectations are extremely high. Next is Alphabet, which many investors see as one of the safest AI plays. The company is integrating its Gemini AI system across Google Search and Workspace products. That could strengthen its advertising and cloud businesses. However, regulators around the world continue to scrutinize the company's dominance. Then there's Tesla, one of the most debated stocks in the market. Bulls believe Tesla could eventually dominate autonomous driving, robo-taxis, and even humanoid robotics. If those technologies scale, they could unlock huge revenue streams, but critics point to slowing vehicle growth and extremely high valuation multiples. Finally, we have Intuit, the company behind TurboTax and QuickBooks. Intuit is now integrating AI to automate bookkeeping and tax preparation for small businesses. If successful, this could make its platform even more valuable. The challenge is that free AI tools are also improving quickly. At the end of the day, 2026 is shaping up to be a year where execution matters more than ever. Whether it's AI, healthcare, or consumer growth, the companies that deliver real results will be the ones investors reward.